It's a bumper week for the Australian economy with an RBA meeting, retail sales and unemployment data, all as Tony Abbott's administration gears up for the government budget release next week. On the line now with a look at what all of this means for the Aussie dollar is Cara Ordway of City Index. Cara, Aussie dollar US dollar is currently threatening the 92 level, having fallen to a 5-week low against its US counterpart on Friday. How much is your 1-month forecast of 91 tied into Tuesday's RBA statement, as insiders expect a dovish tone could send the Aussie lower?
Look, there is certainly some potential for the RBA to play a role in pushing the Aussie lower this week. We may see some jawboning from Glenn Stevens, and we may even see him mention that private sector activity weakness, which has been really a thorn in his side for quite some time now. So, but trade is very much focused on the fact that the next interest rate change won't be until 2015, when it is likely to be a hike rather than a cut now. So, look, it's probably going to be a fairly standard meeting this week, so we may not see that much volatility in terms of reaction from it, but certainly it is a big week elsewhere. There's some huge events on the docket. Unemployment figures, retail sales and trade balance numbers all out. Unemployment figures will be a big one. The employment numbers have been fairly good for the past 2 readings, so certainly we'll be looking for a trend figure there. But really, volatility in this market, in the Australian dollar market, has been very distant of recent. Certainly we've been stuck in this 92 to 94.50 mark for some time now, so it's going to take something fairly big to push it out of that. Traders have been very much focused on this carry trade, that interest rate differential, and that's really what has kept momentum going and kept it above that 92 level so far. So yes, very much focused on local activity this week. A few Chinese numbers out as well, and that's what we're really focused on in terms of creating volatility.
As government warns Australia that a tough budget is on the cards, how much is this being priced into midterm forecasts? Yours, for example, is 89.
I think it certainly has some part to play in that lower push that's expected from the Australian dollar. Certainly his announcement remains somewhat of a surprise to markets and the electorate, but I think really midterm focus very much still on the US, still on the unemployment numbers there, still on what they're going to do in terms of the taper and projections for that QE3 taper. Chinese numbers are also going to be playing a big part in terms of medium term. Commodity price weakness will also have some drag on that number. But really, if we look at what the Australian dollar, or how the Australian dollar has remained above that 92 level in recent trade, it's really been a focus on the fact that that carry trade is still in play. There's still a differential in terms of the interest rate. It's still fairly high relative to the rest of the world. So really it's that interest rate differential is going to be the one that keeps it above that support level of 92, but certainly, as I said, more of a focus on the US and where their global outlook is likely to be.
And lastly, your long-term outlook matches market sentiment with a bearish 12-month forecast of 85. Are we likely to see repeats of last year's Aussie dollar sell-off?
That was a big sell-off that we saw this time last year around May. Certainly, though, that sell-off was sparked in a very different atmosphere. It was a very different environment at that time. It was pre any announcement from the Fed in terms of tapering their QE3, so it was very much uncertain. Markets were placing a lot of expectations on where they would see the US dollar go towards the end of 2013, and I think a lot of that expectation and the forecast for that taper has now been very much priced in, and a lot of it we actually saw in that move around this time last year. So, look, I mean, there are certainly a lot of bearish views on the Australian dollar. A lot of the big banks, I know Goldman Sachs have called for below 70 cents within the two-year mark. So, yeah, there's a lot of bearish calls out there. But look, other banks, some local banks are still calling the Aussie back up towards the 97 level. So there's a lot of disparity in terms of these calls. It's very confusing for traders, and, you know, there's very differing views out there in terms of where traders are placing their bets. I mean, look, if we push it down to if we talk about the 60s, 70s, I think we're going to have to see some sort of big catalyst to push it down there. So I think for me, 85 is more of a realistic target in the longer term, that 1 year to 2 year term, especially if things go on course and the US continue with their taper and local numbers here start to improve.
Cara, many thanks as always for your comments. That's all from me. Goodbye for now.